When it comes to life insurance, it's easy to slip into thinking that a financial product can guarantee our family's future. But Scripture reminds us that our ultimate security must come from God alone. Today, we'll walk through how to view life insurance wisely as a temporary tool for stewardship, not a substitute for trust in God's provision. We'll also cover how much you really need, what types of insurance to avoid, and how to keep your plan flexible as life changes. Spencer, today we want to talk about life insurance, and specifically, how do we think about life insurance as a steward of those resources that God has placed in our hands? One thing we come back to over and over and over again is that God is our provider. We cannot try to do anything of our own accord. God places resources in our hands. We trust Him with the gifts and the skills, the abilities, the relationships, all of the things that He has placed around us. He has generously bestowed upon us. And so we get to steward those as temporary managers of whatever God has placed in our hands. So even as we think about life insurance, I think one of the often pitfalls of it becomes a replacement for how do I trust in the Lord as my provider, whether it's in this season or a season after I pass away. So what do we need to come back to in terms of thinking about what is our framework, what is our stability when we think about life insurance?
Well, we come back to a couple scriptures. One, Psalm 27 reminds us, some trust in chariots and some in horses, but we trust in the name of the Lord our God. That's really such wisdom that we shouldn't be putting our trust in any kind of financial plan and any capacity for our planning process to be able to deal with an event like losing a life. Mm. And then secondarily, that God really is for us. Mm. Romans 8:31 and 32 says, "What then shall we say to these things? If God is for us, who can be against us? He who did not spare his own son, but gave him up for us all, how will he not also with him graciously give us all things?" So He's going to give us far more than enough just financially to be able to move through life. He's given us His own Son that we can have relationship with Him and have relationship with brothers and sisters. So there's so much more to this. Oftentimes we think about a crisis and then trying to deal with that crisis. This is only one small part of how you deal with a crisis like a loss of life. And we need to keep that in full view. So when we think about life insurance, it's just a loving stopgap to help our families in the event that we pass away unexpectedly. There's going to be all kinds of different difficult things to deal with. So having the funds in place and available just takes a little bit of that angst, a little bit of that anguish, and allows actually a family to be able to mourn and focus on that rather than try to juggle 10 different balls of what's going to happen financially, and can we keep the house, and can we do this, that, and the other. To be able to just pause, grieve, and then move forward.
Well, and I think about this, when we lead Journeys of Generosity, one of the videos that we show is a video of believers that are in India, and they give just a handful of rice, and they use that to bless the church. The church uses it to raise money for tithes that go out to missions. And I just remember one of the women says, if we have food and shelter, what more do we need? And I think as we come back to this with life insurance, it's so oftentimes, I think the conversation around life insurance, whether it's with an insurance agent or with a financial advisor, is oftentimes, let's get you the most stable and secure for when you die. And it's like, well, I don't really necessarily want to plan that I'm going to die tomorrow, but I guess I should. I guess having $3 million for my wife sounds good. Like that must be what's right. But the reality is, I think, like you were saying, we can end up moving farther and farther away from the Lord by trying to isolate ourselves from any sort of potential damage that could incur. Whereas I see these brothers and sisters around the world that are giving literally out of their poverty, and they are full of joy because the Lord is providing for them day after day, and they're seeing that tangible provision.
And I think that's what you see as the difference when we look at too much life insurance, because there can be too much life insurance. A person is going to go through a grieving process. What we'd like for them to be able to do is go through that grieving process without thinking through all of the financial ramifications immediately, but not to be insulated from the grieving process in some ways, because they're able to just turn their focus and say, well, that was a terrible experience, but I do have, $5 million or, some much higher, level of resources there, because that can almost insulate us in the opposite direction. And if we've still got that pain that maybe we don't deal with, or maybe we don't lean into community, then it can actually create isolation. It can create all kinds of different considerations too, because if there's people who know that now you have lots more money than you used to, they may be coming and knocking at your door. So there's all kinds of different trade-offs here, all kinds of different ways really that we can run afoul of not trusting in the Lord in all seasons of life, but in this season as well.
Right. Well, and I think that idea of how much is enough comes back to, what do we need for life insurance? It can be stabilizing. It can be that stopgap. If we know that, okay, we've got this mortgage, or we've got college expenses, or we've got 10 or 15 years of a primary income earner's income to replace. Do we need to do all of it? Well, I don't know. But I think coming back to the Lord and saying, Lord, how much is enough? What does my wife need? What do my children need? What is going to, maybe those gifts that I long to make to them, whether it's to help them with college or to help them with down payment on a house in 15 years? Are there things that I can do now that maybe help aid that in case I were to pass away? And I think that's where we just have to always come back to that. How much is enough for my life? How much is enough for my spouse? How much is enough for my children? And not over-insure. Because again, when we're over-insuring, it's, okay, well, can I put a Band-Aid on the fact that dad is dead? By now they have millions of dollars. And that's not where we want to be. So then, Spencer, as we think about this, how do we even address that question of how much is enough life insurance?
I think we want to come back to that core level of living and the loved ones that we have. Every situation is going to be different. So mileage is going to vary, as we say. But especially if we have a spouse who has still children under the roof, and that spouse maybe now is going to have all of the responsibilities of parenting on him or her, now we've got a situation that we really need to think through. What was the income that the decedent had that brought to the table? And how are we going to fund lifestyle for the time, especially that the kids are still under the roof? So that would be one of those first things that we would be thinking through. There's no answer that says, well, it has to be 100%, or it has to be a little bit more than 100%, or it has to be, half of that. But we need to recognize that there are financial ramifications there for that person passing away. And ideally, again, we can seamlessly move to a situation where there are resources there to help care for children and surviving spouse. Now, one of the things to add on there would be, okay, are there secondary education expenses that the couple had said, okay, well, we always have wanted little Johnny or little Jane to be able to go to college, and we were going to fund this much amount. Okay, well, if that's always been the goal and you've been pushing in that direction in saving over time, then considering that as well. Because if that income goes away, maybe there's not a capacity to continue on that path of saving. And then I think a third thing would be, if we have a primary breadwinner that passes away, what happens in terms of the extended trajectory for that surviving spouse? So there's certainly a period of time, if there are children, where that surviving spouse is going to have maybe more of his or her focus, there. But then after that, is there been enough that's saved towards, that next season, thereafter? Because that's not going to just immediately happen oftentimes. And sometimes we see that a surviving spouse, maybe they've taken care of the kids and, they're into their 60s or something like that by the time, the last child is out of the house. And it's very difficult to go back into the workforce, and get a job immediately. So there's all kinds of considerations there, but it would not be uncommon for us to even think about that next season and say, okay, have we saved, have we put enough life insurance in place so that the surviving spouse would also have some funds headed into retirement that he or she might need?
Right. Okay, so we've talked about situations where it can make sense. Where does it maybe not make sense to buy life insurance?
Well, it doesn't make sense to buy life insurance where you don't need it. And this could even be just buying too much life insurance. I mean, we joke with clients that Bill Gates is not buying life insurance. He does not need life insurance. Companies are, as they offer life insurance or any insurance product, they're really good at making money.
Mhm.
And so any policy that's taken out on average is a net loser for the client.
Mhm.
Now, again, they serve an important purpose. Oftentimes, they're distributing risk across a population of people and not allowing it to stay concentrated with just the people that pass away.
Mhm.
So there's an important service that's offered here. But if you don't need it,
Mhm.
then why are you going to buy it? It's kind of like if you say, okay, I'm going to roll one die, and if I get a 1, then I get $50, but every other roll on there, I have to pay $15. Well, if you roll 6 times, on average, you're going to pay $75 and you're going to get $50.
Yeah.
So you're going to be a net loser,
Right.
on that. And that's kind of the way insurance is. So we don't want to buy any more than we need. And we see clients that oftentimes they will take out a policy, maybe that is the peak amount that they will need going forward, which can make sense. But sometimes they take out even more than they'll need there. And that is just, as a steward, it's not the best because one of 2 things happens, and they're both bad. Either you're paying too much for the policy, and you pay and pay and pay, and you never receive any benefit from that. And hopefully that's the case because you don't die, your family doesn't get the benefit. Or you're over-insured and your family gets too much, and then now they have that second or third barn. They have to make the difficult decision to give it away to stay maybe in line with good stewardship principles. Now, if they don't give as much away, does that mean that they're going to be completely distant from God? No, not necessarily, but it does increase the risk. None of us want to tell our kids to drive 90 miles an hour on I-40.
Right.
That's increasing the risk of harm for them. If we keep double or triple the amount of resources that we need, if we go beyond that finish line, we are putting ourselves in peril.
Right.
That's what the scriptures say. So it's the same thing with life insurance. If we take on more than we need, if that face value is more than we need, and we pass that on as we pass away, then we're putting our surviving spouse or our children in that difficult situation already where they have more than enough, and they're going to have a remarkable perspective to be able to come back to the finish line and say, oh, I don't, thanks mom, thanks dad, passed away and you passed on $1 million to me. Really all I needed was a couple $100,000 maybe to buy a starter home or something like that.
Right. And I think, again, this is where every situation is so different. And I think we have to look and see, okay, where are my heirs? What season of life are they in? Where is my wife? Is she wanting to go back to work after the kids go back to school? All those different pieces and elements really layer into the conversation of what is enough. How do I walk with the Lord in this? And then, as I was talking with my father-in-law a while ago about insurance policies we had, he always reminded me of, well, who's the community that's around you? If you are gone, this policy or that policy does not substitute for you. And so are there people around you that are going to wrap you up and help you grieve, help your wife, help the kids grieve your loss, and then maybe even help them get back on their feet? I think we do too much of a disservice of saying, well, I've got to take on all the responsibility myself. And we try to insulate ourselves from needing the church and needing other people and even needing the Lord. And I think that's where the ultimate danger can often come when we're thinking about, okay, I need to do everything I can to put a saran wrap bubble around those that I love so that there's no potential damage that happens. And that often actually produces more damage.
Well, and it's a great point because sometimes we can put all of our focus into some of these strategies that we could use, making sure that we have a will and a power of attorney and the right amount of life insurance and so on and so forth. And those are good steps. Hear us when we say, get a power of attorney in place, get a will in place, do your estate planning, those kinds of things. But maybe even more of a focus on, are my relationships healthy? Are my family's relationships with each other and with our surrounding community, are they healthy? Because if something should happen and those relationships have been lit on fire or they're not strong, that's going to be far more of a detriment than not having enough life insurance.
Right. So we've talked often about knowing what season of life that our heirs are in, as they grow, as they change, how do we need to make some of those updates?
Well, I think it's best if from the beginning we can say, what is it that we're hoping to be able to provide for them, whether we're alive or not?
Mm-hmm.
And if we need life insurance in place to provide for them when we're not, then also having structured our estate plan well enough that we're not going to build that second or third barn for them in the event that we pass away. What I mean by that is this. Let's just say that we have 4 children,
Mm-hmm.
and they are all under 7 at one point. And we have desires for them to be able to grow. And let's just say for the spouse that is earning a higher level of income, we are insuring that spouse. The life insurance on that spouse is more significant. So let's say that is a couple $1 million, worth of life insurance. Well, and that may be over a period of a couple of decades, that you have a term policy. We'll talk about, term versus universal or whole life here in just a moment. But let's say it's a 20-year term policy. Towards the end of that policy, almost all of those financial obligations
Mm-hmm.
may have been satisfied with our income.
Mm-hmm.
We may get to a point, after 20 years where everybody or almost everybody is through college.
Mm-hmm.
There are very few expenses that would need to be covered by that life insurance. So at that same time, we're also the most likely, at least statistically, to pass away because we've gotten older, 20 years older. So what is helpful is if we can construct an estate plan that says, okay, even if, we pass away and all these resources go to kids and we've got far more, we're not going to build them a second or third barn. We've already thought through their finish line. And that might be, you might have reflected on this and prayed on this and said, okay, we want to be able to pass on a couple $100,000 to each of our kids so that they will have resources to, buy a starter home or put, significant funds down on a starter home or something like that, or maybe towards grad school or whatever it might be.
Mm-hmm.
But not so much that becomes a core part of how they provide for themselves in life. Because, you could get to a point where down the road, 20 years down the road, if you and your spouse pass away in a common accident, all those resources go to kids that are 21, 23, 25, 27. That can be really negative for them. And, it can be far worse than them just going out and say buying a new vehicle with the funds or what have you. I mean, if the focus from a financial perspective on life kind of shifts over for them, that can be really, really something that can lead them from the Lord. So I think looking out and saying, how do we construct a plan, an estate plan that considers that we're going to have different needs over time and sets a limit for our heirs. If we're doing that as a couple, I think that if we have one spouse pass away and resources go to the other spouse, at least that spouse is on the same page, ostensibly. They've walked through that planning process. They can make those decisions. And maybe that surviving spouse doesn't need those funds or some of them and can pass those on immediately or decide within a good stewardship framework what needs to be done. It's far less likely, though, that if we pass that on to the next generation, that they're going to make a great decision unless we've worked really, really hard to equip them. And even so, I think that transfer is fraught with difficulties.
Absolutely. So Spencer, the last piece that we want to talk about is just the types of insurance policies and how should stewards think about those? Can you just run us real quick through the different types of policies?
Well, there's so many different types of policies that are out there. We think about 3 main types of policies. One, which would be term life insurance. And just as it sounds, there's a term that it's good for. After that, it ceases to have value. So that might be 20 years, that might be 30 years, that might be 10 years. Whatever that term is, typically what's happening is you're paying on a year-to-year basis or a month-to-month basis to keep that policy in force because you have an amount on that face value that you want to insure, and that amount's not going to change, typically speaking. So let's just say, again, that you decided that you wanted to put a policy in place and it was $1 million life insurance policy. You might pay on that for 20 years. at the end of that 20 years, in all likelihood, the financial obligation that you were concerned about providing for, should you pass away, is also going to be done there. So that is the cheapest policy by far, because there's the insurance company can say, well, most of the time we're not going to pay out on these types of policies. If you have a 30-year term for a 25-year-old man, he's going to be 55 when that policy ends. Well, there's not a whole lot of 55-year-olds that pass away, statistically speaking. The other two policies would be universal life and whole life. And those are more geared towards folks that would have what's known as a permanent policy in place. They're paying in premiums, and the idea is it's always going to be there. That policy is going to be in place, and it's going to pay out the face amount, the amount of that insurance, or it may pay out even a little bit more if they continue to put in significant premiums and perhaps have those excess of premiums invested thereafter. The challenge here is that when we look at it, most of us actually don't need that life insurance as we get later on in life. We have certain needs, especially while we have spouse or kids, in certain sequences of life. But if we've gone through a financial planning process, if we've saved well, usually by the time we get into our mid to late 60s at least, we're self-insured for life insurance. So the most expensive part of life insurance is from mid 60s and beyond, because that's when most people die.
Right.
So we would far prefer to have the insurance cost be much more manageable in something like term life insurance than have it to be on an amount paid versus the face value be much higher in universal or whole life policies there. Now, permanent insurance can make sense for a small subset of people.
Right.
There are laws about the way insurance contracts are written that can provide a tax benefit if you kind of abide by the direction that the insurance company may want you to go. For instance, with the universal policy, you may put in significant funds. Those funds may be invested in sub-accounts, there, and the policy value can grow substantially. You can then take loans from that are tax-free, provided that you don't take out too much. There's a lot of different gotchas that are out there. There's a lot of hoops that you've got to jump through. There's a lot of considerations and trade-offs that are there. It is not a plain vanilla investment type of account. So we've got to be really careful on that. And our perception is that for the majority of folks, that's not going to be the direction that we would suggest folks go as they save for the future. But it can make sense in some circumstances if you maximized all the other ways that you can save on a tax advantaged basis.
Right. Well, Spencer, thanks for walking us through those different types of policies and just this conversation in general of how do we balance what is life insurance, how much do we need, how much is enough, and then at the end of the day, how do we always put our trust back in the Lord as our provider? Clients, if you have questions about life insurance, your policies, wanting to discuss what are your options, we would love to have that conversation with you. And always, we look forward to seeing you again next time. Take care. If you found this episode valuable, share it with a friend and subscribe on your favorite podcast platform so that you don't miss the next episode.
This content was provided by Second Half Stewardship. We are in Knoxville, Tennessee, and you can visit our website at www.secondhalfstewardship.com. The information in this recording is intended for general educational and informational purposes only and should not be construed as investment advisory, financial planning, legal, tax, or other professional advice based on your specific situation. Please consult your professional advisor before taking any action based on its contents.